Hello, everyone. My name is Doug Huber, and I'm the Deputy Chief Investment Officer here at Wealth Enhancement. The last few trading days have been quite a whirlwind for the markets, and we just wanted to check in and provide some color into what has been driving the sharp declines and manic market behavior, what we expect in the near term, and what are we monitoring as we try to untangle the nuances of a complex set of policy developments, the economic impacts, and the behaviors of market participants. Last week, last Thursday and Friday specifically, were back to back very sharp drawdowns in the markets. And really that was a function of highly leveraged market participants kind of unwinding the risk in their portfolios. And so for those that are less familiar, leverage is when, asset managers borrow money to increase their investment base. They then put that into the market to add risk and add return potentially. But when things get difficult, they also often face margin calls from those that have lent them the money where they have to give it back. And so that leads to forced selling where they're saying, listen, I got to take this back. I got to sell this so I can give back that margin loan to whoever lent it to me. On top of that, most of these market participants are very short term in nature. They're trying to generate returns on shorter term price movement as opposed to long term buy and hold where you're really the beneficiary of the economic cycle. And so this was a very characteristic kind of risk off trade, as we like to call it. And you see this oftentimes when volatility really spikes, really gets intense. And folks say, listen, there's so much uncertainty. I don't know. I just want to de-risk. And so you saw last Friday specifically was the largest de-risking event on record for hedge funds. And hedge funds are those large levered players. There's also a lot of macroeconomic traders that have things that we call carry trades on. Again, they're highly levered trades, take up a lot of space in the markets. And when they unwind, there's a bit of a vacuum that comes from underneath them. We also saw quantitative or systematic funds that trade on the behaviors of algorithms. Oftentimes, as losses start to accrue, those algorithms tell them to cut risk very quickly. And so, really, what we saw was not a function of the typical long-term buy and hold asset manager or day-to-day investors, as we probably all are, but more a function of those highly levered and fast moving traders kind of exiting the market last week. And so it was characteristic of these higher volatility markets. It's never comfortable, but now the market is trying to find some footing. And that's what I think we saw today. Today was a very wild trading day. The futures before the market opened were indicating we were going to open 400 or 500 basis points down, 4 to 5% lower. And by the time the markets opened, the market started to rally through the morning. There was some false narrative around potential pauses in tariff implementation, and the market actually shot up to plus 2 or 3% positive on the day before those were deemed to be false in nature, and the market retraced back down into the negative territory. And so, what a wild trading day. Ultimately, I think the market settled down slightly for the day. It's an interesting environment. Most of we typically look to markets for signals on what the pricing mechanism is telling us the economy is going to do. And oftentimes you find nuggets of information, whether it's in the equity markets, the fixed income markets, the commodity markets. And, one typically behaves differently than the other, and that's usually a signal of what the market's trying to tell you. Interestingly enough, over the last few days, the markets have been giving us a lot of mixed signals. And that's not uncharacteristic of previous times. Every new kind of volatile period often is different than the last. But at the end of the day, these are the times that we like to lean back into some kind of what we'll call scenario analysis, where we say, okay, maybe that the future is less clear than we would like it to be. But what we can do is think about, okay, let's map out a handful of scenarios that gives us kind of a mosaic of where we think the outcomes will be. And then we can probability weight where we think those will go. And we can adjust that as more information comes clear. And so that's what the investment team has been doing today and will continue to do going forward here to just give us a better sense, a real gut check of where we think we're heading from here. I think, more importantly, our expectation in the short term here is that markets will continue to be volatile. Oftentimes, following these sharp down days, we see very sharp up days. And I think that is going to be a characteristic of the markets going forward here. I think the market will look for a bottom. Where that will be, we don't know, but we probably are somewhere near. And so we'll probably have sharp up, sharp down, sharp up, sharp down. And so between here and there, we really want to get the point across that it's important to stay invested. It's uncomfortable, that's true, but there's a lot of statistics that have been, shown over time that just missing a handful of the best days in the markets can really result in an impairment to capital over long periods of time. Just missing, I think, the top 5 days can result in almost a 30% lower return over the long period of time. And so it's important that in these volatile markets, we don't make very sharp moves. Obviously, if something is indicated as a really substantial risk, we are going to try to get out of the way of that. But in the interim, we're really trying to stay the course. It's important to keep that in mind, stay invested. And as risk tolerances change, that's understandable. Work with your advisors and talk with them to make sure you're comfortable. But for now, we're going to be monitoring the situation. We're going to be doing our work to kind of determine where we are and where we think we're going. And as things change, we will inform your advisors and inform you. So please don't hesitate to reach out to your advisor or the investment team here at Wealth Enhancement. We'd be happy to answer any questions or talk through any things that you have on your mind. Appreciate you listening tonight. Thank you very much. Bye bye.